and you might have to pay tax if those companies aren't paying taxes, your foreign investments. Basically everything outside the United States you have to report to the IRS.
Haven't done my taxes, I'm too turned up. Haven't done my taxes, I'm too turned up.
Hi everyone, Jim Baker here, and today I have some great information to share with you that's immigration related and tax related. Obviously I'm commenting on the tax part, but it's for people who are immigrating to the United States. So the E2 visa is a non-immigrant visa that allows people who have businesses in the United States to come and go as they please for up to 5 years. I think that's when you have to renew it. So when you're coming and going as you please, it doesn't mean you're a U.S. tax resident right away. You have to satisfy the substantial presence test to become or to be forced to be a tax resident. Usually I say become because it's not beneficial for most people to be a tax resident, although it is for some. So the substantial presence test is basically 180 days in 1 year. If you're over 183 days in 1 year, you'd be a U.S. resident for that period. And then also if it's 120 days per year over 3 years, it's a little more nuanced, but that's basically, if it's ongoing, it's 120 days a year, and that's when you'd be a U.S. resident. So what does that mean? What does that mean for you? Obviously you have a U.S. business, you have some employees, you're getting paid a little bit because you have this E2 visa. But now you're a tax resident. What does that mean? Well, the answer is that means that you have to report and pay taxes on your worldwide income. And paying tax on your worldwide income isn't as much of an issue for most people because you already have a U.S. business and that's where you are earning most of your income, presumably. But the issue is the reporting, the international reporting. So when you're a U.S. tax resident, you have to report all of your foreign bank accounts if your balance was over $10,000, which isn't very much. All of the foreign bank accounts, and then ownership of any foreign companies, and you might have to pay tax if those companies aren't paying taxes, your foreign investments. Basically everything outside the United States you have to report to the IRS, tell them all about it, and then pay taxes on any gaps that exist in there based on your situation in the code. So that's pretty significant for a lot of people, and I often find people on the E2 visas coming into the United States staying here too long and then not doing their taxes correctly, or just going to like H&R Block or TurboTax and just blazing through it and just saying it's done when you completely missed out on a lot of forms. And some of these forms, like when there's a U.S. person owning a foreign corporation, it's form 5471. If you don't report it on time or at all or correctly, it's a $25,000 penalty. And it's a huge penalty. And this is going to be tied to your name, your personal name. So it's even more important than filing these 5472 forms on time because this is really associated with you. So if you're here on an E2 visa and you're staying more than your allotted time to become a tax resident, more than 183 days a year or 120 days a year, I strongly encourage you, especially if you have foreign companies and foreign bank accounts and foreign assets, I strongly encourage you to talk to a tax person who knows what they're talking about. I do. I think I'm pretty good. I think I know what I'm talking about. We just wrote the book about pre-immigration tax planning. It's out soon. You can buy it. I don't know. It might be out when you're watching this. And I'm happy to help. But if you don't talk to me, talk to someone. And comment below if you have any specific questions. Maybe I'll make a video just for you. Okay, so if you like the video, please give me that thumbs up. It's super helpful. If you want to contact us, there should be email addresses in the description below. Okay, so thanks for watching, and I will see you on the next video.